don't know where to begin, better ask Win.
Shane, good to see you. We are starting with a question. What is a retirement drawdown strategy? I know you have 4 tips to help make sure our money lasts. We spend decades building our nest egg, and then when we retire, we need a plan to stop saving and start spending, but not spending so much that we risk running out of money. So again, you want us to consider 4 things. The first one being we have to have a plan to minimize taxes.
Right. Well, it's a huge change. We go from accumulating, saving money for our entire working years to now becoming spenders, where we're spending that saved money, those IRAs, those 401ks typically. And when we start to spend those dollars, of course, it creates taxable income because those qualified accounts have never been taxed. So it's very important to make sure you plan for that tax and do things to maybe even minimize the tax if possible. Now, this chart shows our tax rates over the past recent couple of decades. And we can see that right now, believe it or not, we are in pretty low tax times. So talking about converting this always taxable money to never taxable money is an important conversation that can be had. And you can actually take advantage of the fairly low tax rates we're in right now before they are expected to go up after the end of 2025.
Next, of course, we need to determine the most financially optimal time to claim Social Security. And this can be complicated.
It can be complicated, but the biggest thing I always talk about with Social Security is that there's a personal decision that has to be made. It's not always about the numbers. It's not always about the calculations that you can do for Social Security. There's a big element of, hey, when do I want the money? When can I spend the money? When can I enjoy the money? The simple answer to how do I get the most out of the system is wait till 70 in most cases, but that doesn't always make sense. Maybe by the time you're 70, you won't be able to spend the money. You won't be able to enjoy it. So we can calculate it and provide you some tools to make that decision. But just know that it kind of comes from within a lot of times as well.
Yeah, that's a really good point. Number 3, for those who are lucky enough to have a pension, you need to choose the right pension payout.
Yes, pensions are very important. And for those that have been lucky enough to have earned one, it's a great thing to have. But there are some important decisions that come along when it's time to take the pension. A lot of times there's a lump sum option available, or there are joint or survivor options that can pay for the lifetime of the pension earner and the spouse. You want to make sure you optimize that. And there's a few traps and gotchas out there sometimes that exist with those choices. So make sure you talk to someone that's qualified to help you in that decision.
And last, and perhaps most important, that delicate balance between guaranteed income and long-term growth.
Right. We talked a lot about the difference between IFCOM and income. And we say that IFCOM is typically derived from stock market-based assets. And we say, if the market performs, if the portfolio does what we hope that it will do, then your money will be there, you'll have the growth, and you'll have the ability to take some income. If things don't work out, it could be a different story. Income, as we say, is typically derived from principal protected assets or things that have guarantees, like insurance products from annuity companies and the like. And no matter which direction you go, it's kind of a choice. You have to weigh the pros and cons of each.
So as you're saying, Shane, clearly no cookie cutter answer to a correct drawdown strategy. It's going to be different for everybody. So if somebody wants to speak with you to find their own unique drawdown strategy, how can they reach you?
Best way to reach us is by phone or online. Our phone number is 602-456-1928, or visit us online at winstonandcompanies.com.
All right, Shane, thank you.
Thanks, Erin.
Got a plan for your retirement, 'cause you know it's just down the road. But if you don't know where to begin, better ask Win.